Hey, good evening, everybody. This is Jeremy back with another video. It is 9 p.m. Thursday night, February 23rd, and just want to do another markup, just random. I know tomorrow's Friday. It's typically like a no trade day. Should always kind of sort of be like a no trade day, but what I sometimes like to do, and as I was revising, testing, my trading plan and doing a couple things from that perspective, I would always take Thursdays, Fridays, and in particular Saturdays, understanding that crypto is going to move a little bit differently. I would take these days to kind of just refine the overall process. It wasn't about the end result as much as it was the process, the rules, understanding what I was looking for, things of that nature. So we're just gonna pick. I kind of want to pick a major, but I think I pretty well marked up a lot of the majors. So let's pick GJ, and I'm just gonna stop here. And what I'm gonna do is I'm just gonna remove the drawings. I don't have any indicators, so this will work out. So now that I just kind of stopped where we were at, and this all looks, excuse me, bullish. So let's pinch that just a little bit, but okay. Bull, bull, bole, 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 mac. All right, don't ask. Um, so I'm thinking that GJ could be somewhat bullish, but let's just see. I'm gonna change this color really quickly. I don't use gray a whole lot. I just don't. So we take that as the rule, and say that was a break above. If I can get this, it's not. There we go. I was gonna say it's not cooperating, and I would start there. So I'm just looking at. I'm just looking at where, basically, just as far back as price would take me, where there was actually a move above or a move long. So once I found that, I've just mapped that out and then pulled this across. Now, again, and I think I said in the last video, like the way that I look for positions, trades, whatnot, it's not precise. I'm really just looking at the institutional order flow, and then that's it. Like there's no secret to what it is. So I was looking at this deep retrace, and I could say, okay, this was a retracement, came up, mitigated in here, then broke above. It makes sense, in the short term, because it did come back, mitigated basically the 50 of the MB, or the market break here. It did come back and then it ran. So if this was basically the extreme of that push, or the new market break bullish, it came back, it mitigated orders, it mitigated to the 50, and then it broke back above. So it broke impulsively here, to then set this high. So I can kind of sort of use the same premise. So this may now not be a zone that I would necessarily be looking at, but just for kicks and giggles, we'll call it. Let's leave that just for the moment. And what I now want to do is say, okay, this was that short-term high that was taken out. We can look at this area being the low. And I know you could say, oh, well, it's hindsight. Well, look at where price is and you're going back. Okay, well, calm down. Calm down, calm down. Um, because you could be right, or who knows, something else might be going on. All right, so Let's do one of these numbers, and then I'll actually do something a little different because I'm, as usual in my paper trade, going through my shizzle, my shizzle. All right, so I can get rid of that. That was an MB up, and this was the impulsive move up. So on the 5 minute, if you remember the last video, I told you pretty much stay on the 5 minute time frame. So essentially, what I could do is just within this short bias, I could literally just look at this area. Already, that's a better trade. If you remember the position we looked at the last time with U.S. dollar and Brazilian real, that was horrible. It was like a 1.79 to 1. This is actually a 3.81 to 1 right now. Now, a couple things we could do, and I'm pretty sure if I sit here and I talk long enough, price may or may not move back in here. But let's see. We'll just buy. Let's buy 1,000. Let's just see. And I'll set my stop there. And my TP here. Now, if you're asking yourself, well, listen, it's great you're doing this for us. You're doing, putting this video up and whatnot. But how do we know if that's how you trade? Well, fun fact for you. It is how I trade, but like I said, for me, and I'll say it again. I spend quite a bit of time just on charts, looking at institutional order flow, looking at the overall market structure, and the funny thing is, like, there's some people that will mark up charts just based upon news or the forecasting or the true speculators that are out there. And what I like to do is just use the institutional order flow. If you want to call it technical analysis, then I guess you could say, as a formality, yes, that's kind of what this is. But I tend to just deal from that perspective and that aspect. The only, I guess you could say, financial events or high impact news, as it is referred to. The only things I previously mentioned would be NFP. If there are banks interest rates that are coming out, if somebody even sneezes and it doesn't sound like achoo and it sounds like ooh, FOMC, like that is going to arouse, or for lack of a better term, stimulate the market in certain ways, to where some markets will become a little bit more stagnant and will be referred to, like, you'll hear the term whipsaw, which is basically where prices going up and down, back and forth. And in some cases it will just remain in a zone or a range for an undetermined amount of time, until maybe said news or said event, or on a particular day or a particular speech or an announcement or whatever happens, and then all of a sudden, either the top gets blown off or the bottom falls out. A lot of those types of events, technically, is one of the reasons, and this is going to be not so much a surprise, because the vast majority of you guys don't know me, but what I'm going to say may or may not be something that you've heard before. But here's the secret about Jeremy and trading. You ready for it? Okay, here it goes. So I don't have the greatest amount of confidence in the US dollar. And because I don't have the greatest confidence in the dollar, even though everybody and their grandmother that has a trading account that trades knows that one of the most liquid pairs, the most traded currency pair amongst all forex and currency markets, is Euro USD. Well, it's not a surprise that only recently have I tapped into that, and only because I've been refining my system on it. My mentor almost exclusively trades that pair. So even with those things, like I said, recently I've just actually started looking at it and understanding how it moves. However, even based upon that premise, my foundation is still uh, an area of trust, and it's not trust in terms of the sentiment. Excuse me. It's trust in terms of the true value of the U.S. dollar, and that albeit against the kiwi, if it's against the yen, if it's against the Canadian dollar, the British pound, the euro, it doesn't matter what it is. So I've always sought out the other pairs, the other markets, to even to the extent that if the spread was greater, I was willing to kind of sacrifice the spread for what I felt like was a little bit more. I don't want to say of a sure thing, but I would say I would lean more towards those that I felt was based on a little bit more of a solid foundational financial structure and backing, because let's just face it, the fiat for the United States, the dollar, the tender is still based largely in part to the gold standard, which is ultimately why when you see gold prices go up, you see Euro USD go down, and converse, and so on and so forth. There's a correlation between the two. So whenever you're still based on that type of aspect, and then you look at those two markets, because theoretically that's a it's a currency market, and then there's a commodities side. So when you've got a correlation between those two, it's kind of like what's driving what. Because if you look at, say, the British pound and the yen, yes, there are other mitigating factors outside of just the currency strengths themselves, their interest rates, there's unemployment. There are all other things to factor in. But if you notice, you didn't hear me say anything about, those factors, and then there's wheat and corn, or there's silver. Does it play a part? Yes. But it just seems a little bit more pronounced when it comes to the U.S. dollar and those outliers. So, again, that said, I could still look at the dollar to, like I said, the euro, the dollar to pound, or cable as it's referred to in the UK. Shout out Samuel and Co. But I just don't have the greatest confidence. So one of the first markets and pairs, while we're waiting for this, because we'll come back to that, see if that actually pans out for us. And again, a lot of people probably wouldn't do this in a video. I have no problem doing it in a video. I would call euro pound like a safe haven currency, or a safe haven market, because in some, well, excuse me, I take that back. So euro pound is not, but a market like the pound to the Swiss franc, okay, that may be a little bit. It's not going to be as volatile. So, once you get in, you learn the market. It doesn't mean like once you learn it, it never changes, and you don't have to continue to learn. Every market is gonna evolve, in one respect or the other. So, it's just one of the things where you just have to be mindful. So for me, I always looked at, okay, if the market is extremely volatile, and one of the currencies I don't have the greatest confidence in, I kind of want to stay away from that. So euro pound, to some degree, it just depends. You know, it's kind of like a anti, it's like an antisocial individual, right? Every once in a while, the antisocial person is going to come out of their hole, their shell, come out of the cave, and they'll, frown and shriek from sunlight. But at some point, the sunlight might feel good for a little while. It comes out of its shell, it enjoys it before it retreats and it goes back. So I kind of look at euro pound like that. Every once in a while, you get these moves, but it's in the hole. It's shrieking. It's not, and then they go. Let it go. So yeah, it's always interesting. What I was gonna say that some professionals or some people won't admit, this is one of the markets that gave me such fits in terms of what was going on, where where price was coming from, where price was going to, yada yada. Like I would look at it, and at some points I would just say, you know what, flub it. Do what you're gonna do. Just don't include me. Don't involve me. Just go do what you're gonna do. Euro pound. Um, this is me just loosely looking at this, and again, doesn't really. This doesn't really show me anything other than there's a lot of mitigating that's going on, but this could actually just be tapping into a larger MB. So in a case like this, and that's what I find myself a lot of times doing when it comes to euro pound, is I may go to a different time frame so I can just see a little bit more price data. So from 5, I'll go to the 30, and lo and behold, this is no longer, in my opinion. Now I can probably look for a short, but in my estimation, yeah, I don't know that I'm really doing that. And the reason that I'm not is because the overall price action, even on this 30-minute, is not bearish. It's bearish here. It's bearish here, but the overall context is price is bullish. So I would still actually on a 30-minute be looking for that high to be taken out, and I would be looking not at that previous zone that I drew out, but let's see. I would be looking more or less at this zone. If I wanted to be really, really careful, I would be probably here. So let's see. One there, two broke. But yeah, so I would probably go here. I'd look there. So this I would just get rid of. I would remove. However, it's still possible for deeper mitigation, but if this is my 50, this is my 50 area, then I'm kind of just looking for bullish from there. That's just what I would be looking for. Um in here like that. All right. So now that I have that kind of marked up and marked off, let's go back to the 5, because here's where you can, there's either some level of refinement, or I just literally look at it and say, okay, there's not a whole lot more I can do in there, right? So there's not a whole lot more I can do in here. There may be something in here. Let me just put this in really quick, and then I just want to kind of follow it across with my eye just to see if that. Yeah, it does. It does. It does. So it did clear that mitigation. I was looking, and just so, because this might be a little small, so you may not see what I'm looking at. But all I did was I came in here and I looked and I said, okay, where would it make sense, right? Where would it make sense to come back and mitigate? And again, I want to stress, uh, I want to be very clear in stressing this. I need to make that line a little bit bigger so you can see it. Okay, that should be a lot better. And let me change the color as well. We'll make that another like black or gray or whatever. So whenever there's an imbalance or price moves away from an area, or in this particular case, it's created within this range. Like once you see this high, or if it continues to run, you could say, okay, well, this would be the area I would be looking for price to come back to. But just always understand that price never has to return. And I also mentioned this in my last video, so forgive me for being a little redundant, 2 videos in a row. Um, you're never going to know when price is going to return to an area where the delivery or the movement or the motive was impulsive, and it left a price gap, or what is called in some cases like inefficient price delivery, where every market participant did not have an opportunity, right? That's what the whole reasoning and the term behind when you hear somebody say, oh, there is an inefficient delivery of price here. It just simply means that all the participants were not able to take part. So the way that it's explained is, okay, well, if there's inefficiency somewhere, at some point there needs to be mitigation that takes place before either a continuation or a complete reversal or whatever, right? Okay. But that being the case, you can see if this just broke and you set, technically you could set an alert or whatever and say, okay, I know it's coming back. Well, by the time price gets up here, where'd I go up? Sorry. By the time price gets up here, you're looking at this zone going, what the fuck? Yeah, it's never coming back. I don't know what the, yeah, forget that. And then if you continue to wait and then it gets up here, you go, well, shit. It's really not. And you cancel this zone and you forget about it. But lo and behold, that's where it was pushing to. And it's come all the way back, mitigated all the way back down. And we're still going, and lo and behold, here we are, right? All this time later. So this might actually be a good position to take. Maybe, we don't know. But Friday is usually, I like to call Fridays reversal days. This may be the day where you're looking like, okay, it's going long, and London open. London might decide, yeah, we were gonna go long today, but we decided we just want to go short. We'll go long next week. We're gonna go have some tea and crumpets, and we'll go long next week. We're gonna go short. So, I don't know. I don't really anticipate. I don't see a reason really for price to come back in here. I see where it would have mitigated. Took some liquidity back here. Equal lows get cleared, and then you've got a movement back up and in. So the one thing that would kind of really illustrate whether or not you're looking to see some shift, or the momentum that's going to be biased more towards long movement, I might personally wait for a break of this. This, it's not even an intermediary. It's a short term retracement that's short, but it's also a recent high that was put in after this low was set. This low broke this one, so there's a little bit of liquidity, or you could consider that maybe a sweep, if you will. And now prices kind of moved up. So me personally, I might very well look for a potential break here. And let me draw this zone out so you get an idea of what I'm looking at. And again, not financial advice. This is all just basically educational and just kind of sharing some ideas with you. I would wait for that high to be broken, which would show me, okay, maybe there's momentum, maybe not. Maybe there's just additional mitigation, or you're looking to close more orders. This in and of itself, we were talking about inefficient price delivery. So this by itself would be enough of a catalyst in some cases for somebody to look at this and say, hey, I want to trade back up into here, right? But my overall context would be, even though this looks like it's short, it looks like it's staying short, it looks like it might come back up and run short. Totally possible. I'm not saying it's not. I don't know. I'm looking at the 30-minute. We're on a 5 now. I'm looking back at the 30-minute structure. And the 30-minute structure tells me it's going to tap in. It should come in here. May. Or it has already, so there's no should in it. It actually happened. It came in. It tapped. It did not break this low. Okay? Didn't break the low of my range. And it could probabilistically move away from here and take out that high, because on the 30-minute, the overall institutional order flow says this market is long. That's what the order flow says. That's not me. It's what the order flow says. So if I wanted to do that, I could put a buy limit there. I don't need to do 25. We could just do 2,000 just for kicks and giggles. So I could buy that. And then what we could do is we could refine this zone. Now what I'll do is probably refine below this low, right? Because I would treat that as a short-term protected low, only because it cleared this liquidity, and now it is initially broken here. It's broken this retracement high. It's not this one, but it's broken this one. So barely, but it broke it. So I would look at this zone and I'd say, okay, that's broken above. Well, where did this come from? I would look here, right? I would put that low in, but I would use my protected low as the move it to where basically when price moves back in, it taps me in. It could sweep here and continue, just like it swept here and it's now looking like it may. Don't know, don't know, don't know. But there is a higher degree of probability that it may continue. And then there's another probability that says maybe it comes up, it mitigates, it closes some of these orders, and it smashes right back through and it stops me out. Could do that too. So we'll see. We'll put my target up here. And yeah, then we're done with that. So don't know exactly how these will play out, but I'll keep them running. This video, speaking of running, is running a little bit long, but I appreciate you guys for hanging out. Thanks for watching the video. We'll be back next week. And hopefully next week I will narrow down a couple of markets that, not so much my bread and butter, but a couple of markets that I like. Also, I'd like to introduce you guys to maybe not as liquid a pair as Euro USD, but it does have something really promising, really encouraging, and I think it'll catch a lot of people off guard. It's something that, of all of the trading channels out there, of all of the currency analyses and trading strategies and plans and the Lambo conversations, I'm almost certain that I can give everybody an extreme unique value on a market that you've never had any YouTuber talk about. To have you wondering what that might be? You have a couple of you going, this guy's full of crap. He's capping. That's straight cap, bro. Bro, that's cap. We've heard every market. There's been an out. I guarantee. I promise you. It's a market. You have no idea, and the irony in it is, I think I might have had it up when I started the last video. Not 100% sure, but I may have referenced it. But if not, this is the last hint I'll throw at you. The spread is as good, if not better, than the spread you get on Euro USD. And no, it's not a major. That should be enough to tickle your palate. And with that, gents and lassies, ladies, thanks for tuning in. Thanks for watching. And I'll see you next time.